Hello, and welcome to our new video series at Investor Security Trust called The Pulse, where we bring you timely investment commentary from our financial experts. I'm Kevin Pfleger, Managing Director, and today I would like to talk to you about the recent correction in the stock market. So I think everyone's been watching the financial markets and they see that the stock market has dropped about 13% from its all-time high through Wednesday, the 20th of January. We've recovered a little bit since then, but it sure has investors nervous. What happened is the Chinese stock market fell 7% and then closed. They had a policy where if it dropped too much in one day, it would close. That really started the markets off, around the world in a lower fashion. But since then, the price of oil has contributed to the decline. I took a look at all the trading days that we've had in the month of January, and we've actually had 14 separate trading days, and on 10 of those days, the stock market has gone the same direction as the price of oil. So really, oil is now the thing that is contributing to the downside, very much so. But I don't think that continues, and I'll tell you why. Okay, so the stock market has dropped, almost 13%, but I think we have some things on the horizon that will really change the negative sentiment. The first thing that we have is on Wednesday, the 27th of January, the Fed has its annual or bi-monthly FOMC meeting. And we expect the Fed to acknowledge the volatility in the stock market. And even the acknowledgement will cause investors to be reassured, and I think that helps the market. The second thing that will happen is we get one of the most important economic releases each quarter, and that's the GDP report on Thursday. Although most investors are expecting 2%, many have also stated that it's going to be lower than that, maybe even lower than 1%. So if we get anything near 2%, I think it'll be very helpful for the stock market. Finally, next week on February 5th, we get the monthly jobs report. And this is also one of the most important releases on the calendar. Jobs have been the one thing that have held up very well through all of this market correction, the recent one and also the one in August and September. And I think this will remind everyone that our economy is still growing very nicely. So that's it for this update. Stay tuned for our next edition of The Pulse in the coming weeks. If you have any questions on this commentary or any other financial matters, please feel free to contact us at 239-267-6655 or at allabouttrust.com. Thank you.